Look at the US stock market today, and you will see tech giants driving an incredible financial rally. Billions of dollars are pouring into artificial intelligence infrastructure, creating an impenetrable American monopoly. But the nature of this tech boom is widely misunderstood. NVIDIA CEO Jensen Huang recently pointed out that AI companies are no longer software vendors. They are factories, and they are manufacturing an entirely new digital commodity. That commodity is the token, the absolute smallest unit of data, usually about 4 characters of text. Tokens act as the base currency of this new digital economy. Startups building AI applications must buy these tokens from developers who own the massive language models. The global AI race is a massive industrial manufacturing operation. The winners will be the companies that produce and sell these tokens at scale. Right now, American startups are heavily dependent on closed, proprietary models built by tech giants like OpenAI and Anthropic. To get the tokens they need to run their apps, they have to pay for access through restricted application programming interfaces, or APIs. This chart shows the harsh reality. US developers charge a massive premium, with top-tier models costing $15 or more per million tokens. This creates a lethal trap. Locked into a single vendor, a startup's operational costs explode the moment their user base scales up. The United States has built the world's most capable artificial intelligence engine, but by pricing the fuel for that engine as a luxury good, they are strangling innovation at the ground level. This chart reveals a quiet migration happening right now. 80% of US AI startups are actively defecting from domestic APIs and switching to Chinese open-source models. Beijing recognized the bottleneck in the American market and adjusted their macro strategy. Instead of treating AIs solely as a software race, they are subsidizing token exports as a heavy industrial commodity. Tech firms like Alibaba and DeepSeek are operating massive server farms, tapping into China's abundant supply of low-cost electricity and highly subsidized data centers to manufacture tokens for fractions of a cent. Chinese developers offer tokens for as little as 28 cents per million, a 40 times cost reduction compared to US models. Because these models are open source, startups bypass API toll booths entirely, modifying the intelligence to their exact needs. China is capturing the global startup ecosystem because they have positioned themselves as the ultimate low-cost manufacturer of digital intelligence. It is easy to assume these cheap models are inferior to American systems, but major companies are already proving that theory wrong. Airbnb recently integrated Alibaba's QN model directly into their daily operations. By utilizing this Chinese model, Airbnb slashed their customer service resolution times from nearly 3 hours down to just 6 seconds. Independent developer tools like Dayflow are reporting the exact same thing. They are achieving performance parity with the top US models in niche coding and productivity tasks, completely avoiding the massive overhead costs. For the vast majority of commercial applications, Chinese AI works exceptionally well and costs almost nothing. That renders premium US models financially obsolete for routine daily tasks. This flowchart illustrates the long-term consequence of that 80% defection, a continuous global data feedback loop. Every time an American startup fine-tunes a Chinese model, they inadvertently perform free R&D, actively improving Chinese AI infrastructure for the rest of the world. This decentralized, crowdsourced improvement directly threatens the business models of American tech giants, who rely on hoarding user data within their high-margin, closed ecosystems to stay ahead. The exorbitant cost of the US ecosystem has engineered an open-source trap. American developers are now acting as an unpaid workforce, accelerating Chinese tech expansion. The metric for global AI supremacy is shifting. It won't be decided by the highest benchmark test in a closed lab. It will be decided by who can provide the lowest marginal cost of intelligence in the real world. We are looking at 2 distinct futures. In one, US companies remain a boutique, expensive luxury. In the other, Chinese models become the ubiquitous, invisible utility powering the entire internet. If American developers continue pricing their intelligence out of the daily digital economy, they surrender control over the foundational layer of the next technological era. Intelligence is the new global commodity. The nation that successfully industrializes its manufacturing at the lowest possible cost will dictate the future.